Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. And tonight, I am joined by the man, the myth, the legend, the person that all of this is named after. Riz, how you doing tonight, buddy?
I'm doing well, thank you. I appreciate the intro.
Oh, not a problem. We're glad you're here, and we always enjoy it when you can join us on webinar tonight. And really looking forward to getting your insights. And I know everybody here in Elite is as well.
Yes, I appreciate that gesture. Yes, I do my best to get on these as much as you can. You do an excellent job running these week in and week out. So yes, absolutely. It's a pleasure to be here.
Really appreciate it. Really appreciate it. And it's always a pleasure to have you with us. So let's go ahead and touch base on the S&P 500. Simon was saying it's like, suffering, from last week from the drop. And obviously over the last 5 days here on the S&P 500, it has been a little trending down a little bit as opposed to this meteoric rise that we've been having since November. Obviously, we topped out here our new all-time high on the 8th of January at 3826.69 for the S&P 500. And after that, it's been on a little bit of a downtrend. Riz, I want to get your opinions on this. Do you think this is just a correction, or do you think this is something that's going to be going on with all the concern, around the United States right now with the inauguration on the 20th? It's not a political question for anybody who's asking, but obviously we need to keep these events going on, in the world in mind when it relates to the markets.
Absolutely, yeah. So great question, Chris. You're right. It's a classic kind of curling over. In fact, those of you, you're all in the Elite membership, whoever's watching this, or maybe you're watching the recording and maybe you're not in the Elite membership, but I can assure you those that were paying attention on Friday morning, I saw the kind of reversal occurring in the S&P 500 live. And I was calling it out. I was like, okay, guys, down, 40 basis points, 0.40%. Okay, now it's down 0.60%. And then what I did was I just had any of the open positions that we had throughout the week, again, swing trades. If they were in the profit, I took those profits. Even, in fact, Palantir, which is what we took, and we can analyze that later, but just to give an example, I got in that in the morning as it was pushing up, and then I'm like, you know what? I'm getting out. Just taking profits or just taking break even. I'm getting out. That was supposed to be a swing trade, obviously, but I changed my mind. So you have to be very malleable, very, very quick. And that's exactly what was happening on Friday. You can see with that candle, markets did go lower, but made a little bit of a recovery. Ultimately, I think it was down about 70 basis points or something, 0.7% or something like that. Not too bad, not too big a deal. But what we are looking at in terms of technicals is a bit bearish. If I have to point in one direction or the other, it's definitely looking bearish. You don't have to be a genius to see that. If I had to put a near-term kind of target on the S&P 500, I would say 3750 is the near term, maybe this week. Remember Monday's a holiday, but Tuesday to Friday, maybe we see 3750 in the S&P 500. If we break below 3750, all right. Remember, there's no absolutes in markets. If we break below 3750, you can expect a hard push lower to 3700 in the S&P 500. Okay, so 3700 is the area you want to keep an eye on if we break below 3750. Right now, this is looking a bit bearish. You don't need me to say that to you if you are in the Elite membership and you were watching and paying attention on Friday, because I sold, and when we cover our positions, Chris, as we will, I will say, like I close this, close that. In fact, I update, the open positions, and I did, after market close, or as markets was closing, I said, these are the open positions I have, and I trimmed them, and I'm okay with that. For those of you that have been in Elite for a while, who've been following me for a while, and paying attention to my trades and how I trade, that I've traded a lot more conservatively. And that doesn't mean, you trade scared, never trade scared, but I've traded conservatively in the sense that when I see profits, I'm trying to protect them. I'm not getting too aggro. I'm not here trying to, hit a home run every single time, right? I'm Also, on the flip side, if I see a position that's, at break even, people will say, well, give it more time. If I see a market environment that's not suitable to me, aka on Friday, what we got on Friday, I'm okay. Forget it. Just let it go. I'm okay with taking it off. Maybe Monday, Tuesday, we have a bullish day. Okay, maybe I'm completely wrong. We have a bullish day, and those positions would have done well. It's okay. I can't tell the future. It's fine, right? It's fine. I'm not concerned, and that's okay because what I'm seeing right now, it's not giving me too much confidence. It's not telling me that what this is the kind of environment that um, I play fast and loose. No, I have to hold my chips close to my chest. And this time around, leading into this week, I knew that we have a long weekend. I don't know what's going to happen. I mean, we're Saturday night when we're doing this, but I don't know what's going to happen on Sunday or Monday. But these are things you don't really want to carry, and a lot of people were feeling that way as we saw the price action on Friday.
Awesome. Thank you for that analysis. Really appreciate it. And it's really good insight. And yeah, guys, I mean, there's definitely a difference between trading conservative and trading scared. Now, we definitely do not trade scared here at Elite, but being a little more cautious in, this market environment is not necessarily a bad thing.
And if I may add something, Chris, a word of advice, and a tip here for people. 2021, I'm going to be focusing a lot on making sure that when I have these positions, I would say setups, these trades or setups that I feel confident about, they're kind of like my A+ setups, ones that I feel confident about, I feel good about, that I gel with. I'm going to size in to that. Okay. And if it's something that I feel like, okay, this is not my kind of trade, or it's the setup is, not A+ or an A setup, it's not something that I'm 100% confident in, then I'm okay with letting that, be taken off, whether it's for a small loss or whether it's for break even or a small profit, because it's all about making sure that when you have the opportunity, you back yourself. And how do you back yourself? You back yourself with your capital, right? But when you're in situations that don't 100% align with you, you can test the waters. You can, take a stab at it. You can get your toes wet. But if it's not aligning to you, then by all means, take it off. Don't go too big. That's the critical factor that people miss. They think, all things are equal and every trade needs to be the exact same amount size. No, I mean, especially when you're new, maybe, but when you have gotten the hang of things, you have experience, then you have the discretion and ability to size up and down depending on the position and the trade that you're taking.
Excellent advice. Excellent advice. All right, let's go ahead and move here to the different market sectors we've got. We'll look at the year to date, but then we'll back it out because we don't obviously have a whole lot of data right now for the S&P 500 this year. We've only had a few trading days, and this is not even correct. There we go. There's year to date right there. So I mean, we've only had a handful of trading days, so there's not a whole lot that we can take from this, other than the fact that since the year has opened here for 2021, energy has been on a bit of a tear, and we will cover that in the next slide, actually, when we talk about oil and gold like we usually do. But currently, S&P 500 up just under 2% on the year. Most everything is up except for tech, which is a little surprising. But actually, if we pull this back out to a year, we can actually really see what's been going on, with the markets for the last about 200 trading days, where tech is just blowing out everything else. Tech is the big winner as of late in the market. And, we have some others that are underperforming as we finish the year. Energy was in pretty bad shape. Real estate, utilities making a push back up, and financials as well, starting to get back into the green. Riz, when we're looking at the different market sectors here, is this huge, number that we're seeing on tech a problem? Is that something we need to be worried about? Or should we be looking to scale in more into tech stocks and things like that? What are your thoughts?
Yeah. So Tech's been leading. This is nothing new throughout the year. When you're doing your recaps or whether I'm on, it's a common thing. Tech's leading. Okay, maybe it's come back down a bit, but it's always been leading, and you can see that, right? And I don't think that's gonna change too much this year. Sure, we may see a bit of a sell off or a pullback in the tech sector, but I don't think it's going to lag, let's say, something like financials. I don't think it's going to lag something like the utilities. Okay, it's always going to be, I would say, a leader. And if markets are selling off, then tech will sell off big too. But if it's leading, markets are moving upwards, like we've seen the last 9, 10 months. Well, tech's going to be right up there. So one thing I'm really positively surprised about is energy. Take a look at the massive push up. Like you noted just a few minutes ago, energy's actually the outperformer this year. And I know it's only been 16 days in the new year, but yeah, like wow, we just a tremendous rally in not just oil, but even any kind of precious metals, commodities, right? So a lot of people are saying that commodities are looking very bullish and breaking out in the long term for in 2021. And that kind of narrative remains to be seen if it plays out. But so far it is. I think financials also coming in here with a nice boost. We just had some bank earnings, with some of them not doing too well. It's a bit of a mixed bag with bank earnings that occurred so far on Friday. Also, another thing, earnings. We're now going to be in earnings season this week. I mean, if someone's looked at the earnings calendar, we shared it in Elite. It's packed. It's packed, and it's going to be packed for the next couple of weeks. So, yeah, exciting. And how this earnings season is going to very much I would say indicate how these sectors are going to move, right? If we see one of the big tech companies, miss badly, well, that could potentially drag down the entire sector, right? So you might see, tech pull back further, or if they do well, guess what? You're going to see the entire sector get lifted up along with the S&P 500. So it'll be very interesting to see how we do in this earnings season. This earnings season is kind of, for me, I'm bullish on earnings relatively on a broad scope, but if I find that our earnings are on a large scale are not meeting expectations, or they're missing, or corporations are not guiding too well, then I'm gonna probably change my outlook for 2021 as a little bit more bearish than what I thought, right? And that's the importance of being adjustable, as I mentioned in the beginning of the webinar.
Speaking of energy, obviously we have a new president-elect coming in here who has touted that he wants to do something towards the energy sector with moving towards more, green energy, more renewable energy. Do you think that is something, a type of future catalyst we need to start to look at, maybe taking some plays on that now, or do we want to wait until like some of the verbiage comes out in the bill, or
Yeah.
what are your thoughts on that?
Yeah, absolutely. I think the time is now. It has been since November, right? And I think we've seen some of that occur already. If you take a look at solar stocks, we take a look at some of these EV plays and renewable ETFs and renewable kind of sector plays where they've done quite well. It just kind of depends on the individual security as well, because some of them can be massively hyped, massively volatile. But solar being a specific area. But yes, absolutely, I think this whole industry, of clean energy, of renewables, of EVs, although some of them, there's pockets where there's just way too much hype, way too much, overvaluation, and way too much craziness. But broadly speaking, yes, I think there's a lot of opportunities, and the time is now rather than later, because it's not unheard of for the new administration, especially, to favor one kind of sector or one kind of plan over the other, and we've already known this, that the incoming administration is pro and in favor of renewable clean energy. So yeah, I'm absolutely in favor of making sure that people make that kind of shift. You just have to be very careful how you expose yourself to that. You don't want to buy, a small company as a speculative play on EV or on clean energy and have it be a stock that's up, 600-700% already, right? Like you have to make sure you're picking the right play when you're doing it.
Absolutely. Timing is everything. And, not trying to chase is something that we will always warn everyone about. I know a lot of you guys ask me about certain tickers here in the Q&A session, which we'll get to at the end. And some of them have already made the move. And I understand, trust me, having, done the whole day trading thing before, it's very tempting just to go for it. You're like, oh, it's going to be fine. But then when you chase, that's usually when you get murdered the hardest. So just keep an eye on what you're looking at trading, guys. All right, let's take a look at some of those commodities here that we were talking about. And, Riz alluded to it already, that oil making a really, really big push since November, finally busting out of the 44, 45 area and looking incredibly bullish right now on, vaccine news, production, things of that nature. Riz, kind of give us your analysis. What's been going on with oil, and are you still bullish on oil right now?
Yeah, so I'm I would say more bullish than bearish for sure. If I have to pick one, I'm in the bullish camp, and it's easy to see why. I've been calling for oil to be around $50-$55 mark in pretty much every session that I'm on in here. I think now we're kind of getting to that good, proper, solid oil level. When oil hit like $20, $30 a barrel, I was like, this is ridiculous. No way is that a fair value for oil. Once it started getting in the 40s, I'm like, no, I think we have some room to go. And now that we're at around 55, 54 area, I think we're getting quite, I would say, equilibrium, or quite a fair value for oil in terms of the current situation. What is going to change that thesis? If we see, we already know cases are increasing, deaths are high. I'm talking US specifically. Now, if we see a wider, more, I would say, national lockdown, then man, this, oil is going to plummet along with probably everything else. But if we see something like travel coming back up, people are, wearing masks, or people are doing this, and we see cases decrease as we come out of the winter weather, maybe heading into spring. Well, I think with the backing of OPEC, okay, if OPEC keeps production similar or does not increase as much, even if they increase but don't increase too much, the market's going to take that as a bullish sign and take that as OPEC, being willing to curtail production so that we can have a good, sustainable price per barrel. And at that point, we could see $60 a barrel. But right now, I feel 55, 50 is kind of that ideal mark. If we get to oil being $40, $45, I may consider a long position at that point. Either via ETFs or direct plays in oil companies. But right now, if I have to make a projection, I would say 50 to 55 is a sweet spot for oil in the current environment. If something changes positively or negatively on a big macro level, then of course, anything can happen. It could go to 60, it could go to 30, 40, right?
Dwight, we will answer that question for you at the end. So guys, just save your questions for the ends and we will get to all of them for you. Just one note on the travel, guys. One thing I've been noticing is I'm kind of in the international travel area where with my day job is one thing that's going on now is more and more airline companies are requiring COVID testing before you get in there. And I think they're definitely hurting. I know as an industry as a whole. But I think that if, like what Riz is talking about, if the cases start to come down and things like that, I think the more travel is going to come back. I think the better that's going to be for oil in general, because I don't see us running 787s on batteries anytime soon.
Yeah, absolutely.
All right, so let's move on to the shiny stuff, and that is gold here. Now, gold took a huge hit last week. As people were letting go of gold and getting back into securities. And actually, it looks like on Friday here, we broke down below the 200 simple moving average on gold. And you were mentioning earlier, Riz, that you kind of the word on the street, so to speak, the Wall Street, that is, that commodities were on the up and up, but it looks like gold is looking a little bearish right now. What's going on with that?
Yeah, so precious metals, one of the commodities that are lagging. There are many commodities, but precious metals is lagging. We've seen, gold, like you mentioned, kind of plummet last week. And I said this even last year, leading into November and December when I was on, I said, I'm bearish gold. I'm not a buyer at especially when it was near 2000 area. I was not a buyer. But even in around the 1900, I'm like, I'm not buying at $1,900 an ounce. I would like to see it kind of settle a lot lower. And right now it seems to be doing that. I think 1800 right now, it can kind of sustain that. The reason gold is coming down a bit, and I think it's going to probably consolidate. I don't think it's going to crash or maybe dump back down to 1500 like it was in beginning of 2020. I do think it may consolidate here. But reason being, because we've seen people start taking more risk. We've seen, inflows into the market. We've seen inflows into, stocks and risk assets. We've also seen, things go into more speculative things like cryptocurrency. And as a result, we've also had this kind of area where a lot of people are like, you know what, maybe gold isn't as good of a hedge as I thought. And maybe I want to kind of go into something else. So that's perfectly normal because that's like a pendulum. It will swing different ways. And the opposite was true in beginning half of 2020, right? When gold just kind of rocketed with COVID, getting the news cycle. So I would keep an eye on the 1800 level for gold. A break below 1800, 1750 an ounce is not good. Okay. But I think it'll settle here. I am keeping a close eye on inflation this year, especially Q1, as we continue to kind of progress throughout the year, because if we see inflation start ticking up now, the Fed has said they want inflation to be a little bit higher than 2%, 2% of the average inflation rate annualized. And the Fed is looking to have inflation a little bit higher. That hasn't materialized. With all the money printing, with all the stimulus, you would think, wow, we would see inflation as a whole. Remember, not inflation in specific areas. Like inflation in groceries, I know has happened, but it's not showing on the total CPI index, right? So it's consumer pricing index. So as a whole, 2+% inflation is what the Fed wants. If we see that inflation increasing at a broad level quickly and rapidly, then you can expect things like gold to go higher. Okay. If that doesn't happen, then I think gold can languish around 1800, especially as the economy starts coming back alive, hopefully, with COVID kind of dying down, along with the vaccine ramping up. So, something to keep an eye on. Gold is something that you can get a lot of insights from without even having to trade it, right? And I just showed you that there, where you can get insights on inflation, you can get insights on risk on or risk off. You can get a lot of information from just seeing how the price of gold is moving.
Awesome. Thank you for that. You mentioned the C word. So I think it bears mentioning to talk about this a little bit. Bitcoin obviously kind of going crazy right now, and we haven't talked about crypto in a long time, though I know that a lot of people have been asking about it in Elite and things like that ever since, the big crypto crash. Let me zoom back out here. Here it was. Here was the big run up here in the end of 2017, and then Bitcoin kind of languished until recently when we finally busted over 20,000. And now it's just going crazy right now. Riz, what are your thoughts on Bitcoin? I know that there are a lot of people who are very, bullish on it, and we've been kind of really hesitant about touching crypto again.
Yeah, I haven't. It's not a secret that, for those of you that have been following my journey for many years, I did trade crypto back in 2017, but I also exited crypto and back in end of 2017, around the time when it hit 19,000, 20,000 per coin for BTC. I have not. Okay, I get a lot of questions now, even more so than beginning of last year. A lot of people, Riz, do you trade crypto? Are you holding anything now? What do you like? I, to be very transparent, do not trade crypto. Haven't traded it since end of 2017. I do not have any position in any crypto. And is it easy for me to look at this rally and go, I wish I would have gotten in? No, because I don't operate that way. But I do always say that, it's great for people that are bullish on crypto and they've hung on since 2017 and before. Great for them. But guess what? We need to temper our expectations. People need to make sure that a move in any asset class, whether it's crypto, oil, stocks, bonds, whatever, if it's parabolic, if it's euphoric, if it's hype, the chances of that move reversing is very much higher than if there's a reasonable, cautious move up. Okay. So 2017 was a ridiculous move in crypto. That is similar to what's happening now. Sure, a lot has changed since then, right? It was a completely different market environment, completely different economic environment. There was no pandemic. The political situation was different. So a lot of things were different. But take a look at the chart there and tell me it doesn't look a bit too similar to what it does look like now. Okay, like just when something goes parabolic like this, I'm always hesitant. Maybe I'm too cautious. Maybe I don't know. Maybe I've been there, done that. But I just feel like you have to be careful. You have to be careful with these. Could it go higher? Absolutely. Absolutely. Bitcoin can go 40, 50,000, whatever number you want to pull out of your ass. The reasonable thing to do is make sure you protect your gains. You don't become a bag holder. You don't marry the position, because I'm telling you, cryptocurrency isn't changing the world tomorrow. Maybe in the next 20, 30, 50 years, perhaps. Okay. But it's not happening tomorrow. So temper your expectations, because there's been a lot of people since 2017 who were just holding, waiting. This is their second wind. And where it goes from here is going to be very, very important, because if people realize that this boat is not going higher anymore, you're going to start seeing people taking profits. And once people start taking profits, you're going to have a situation like, 2018, 2019 for crypto, where it could just come back down. I'm not saying it's going to come back down to like 5,000, 3,000, or even 10,000, but it can come back down and it can kind of just consolidate. Okay. So keep that in mind. And you can apply this philosophy, this mindset that I explained for crypto, to any stock, to any asset class. It's not just me bashing crypto or, against crypto or anything like that. You can apply this, like I said, for anything else. And I'm a firm believer in this kind of thought process. I apply it to stocks. That's why you won't find me trading or buying something, like Neo or stuff like that, that's already up, triple digit percentages in a span of a few months. I just can't do it. Sure, there's money to be made, and a lot of amateurs have done it, but they haven't done it because of risk tolerance. They haven't done it because of experience. They haven't done it because of due diligence. They haven't done it because of their risk management. They've just gotten lucky. And guess what? Markets will mean revert, where you have these people on Robinhood doing extremely well, people on Wall Street bets doing extremely well and looking like geniuses. But guess what? Things mean revert. There's going to come a time where, even that's going to balance out, where even idiots can look like geniuses, but only for so long.
That's right, guys. The coin flip only works until you start hitting tails all the time. But guys, listen, just as from a sheer technical analysis, after we bounced off of, the 30,000 support that we kind of nailed here in chat, we haven't been able to reclaim these previous highs. So this is a lower high, guys. That would indicate we're looking at a downtrend here on Bitcoin, at least in the short term. We'll have to see how that plays out over the next couple of days. And as always, remember, cryptocurrency is traded 24/7, 365. There is no market hours for crypto. Crypto is always being traded. So just keep an eye on that. If you're in there, be very, very careful, guys. I think that's the big thing I want you to get from Riz here is be incredibly careful if you're trading this stuff. Make sure you lock in your profits. And I know a lot of people on the internet are touting, oh, I think it's going to go this high, or I think it's going to be this much by this year. They have no idea any more than I can tell you, what the price of Tesla is going to be 2 years from now. It's people just guessing. And there is no regulation. It's completely decentralized. And the fact that there's no regulation means that it can get a little crazy here in crypto. It truly is the Wild West. So please be very, very careful when you trade this stuff. That was kind of the thing I want to talk about. Okay, you had mentioned PLTR, Riz, so let's take a look at that. And guys, now it's the time for Q&A. So if you want to start posting your questions, go ahead and do those. But let's talk about that quick trade on PLTR, Riz. What was going on with this one?
Yeah, so I entered this in the morning, pretty much first thing in the morning on Friday because it looked good for a momentum long. I like the company. Some people did mention that the lockup expiry period is coming up, and yes, they're right. We also know earnings are coming, but ultimately, I like this company on a short term, medium term, and long term. So the way I look at this thing is, even if it pulls back down below my entry, I'm okay carrying it, right? Because my time frame and thesis and conviction in it all aligns. So for me, I got in thinking, okay, there's going to be a swing trade. Either we hold for a few days to a few weeks at least. But because of what happened with markets, and you could see in that candle, it just kind of got pushed down. And I exited for a break even, tiny profit maybe, but let's just say break even. And yeah, I had to be really quick on my feet for that one. And I do like the company. So for those of you wondering, what my thoughts are on it, I do think there's upside. We just kind of have to wait and see, because I took this trade not because the technical pattern is the best or it's an A plus. I took this trade because, like I said, I have conviction in the company. I have conviction in the stock. I feel like this is a good company with long-term upside, and I don't mind carrying it, even if it goes against me in the near term.
Awesome. Well, thank you for that quick analysis. Let's go ahead and take a look at a couple of the bigger names that we traded this week that I think some people might be interested in. And if anybody wants to cover a specific ticker, please go ahead and throw it in there. Pfizer. This obviously one of the big, biotech stocks that obviously got their vaccine approved. But man, we have seen a rollover since that approval. Riz, what is going on with Pfizer? Why are they taking such a big hit here?
Yeah, so Pfizer, big pharma company. Obviously we all know they're partnered up with BioNTech and have been rolling out the vaccine over the last month or two. But I find that the market has really kind of misunderstood the company. They're basing it solely on, the vaccine and how that pans out. I say, look, even if you take the vaccine out of play, let's just say the vaccine's a flop. Okay. Pfizer is a great, solid, amazing company with a great track record that produces other drugs and other medication, right? This isn't a pure vaccine play. So to me, I feel like the market maybe, kind of overlooked this name, and I find this to be an excellent purchase for long term. I'm a big believer in the company. I like the company. In fact, I own a decent amount of stock on it. So personally, I think it's a great entry. Anything in 35 to now is just an amazing entry, so long as you have the time frame for it. Because as we've seen, the technicals aren't extremely bullish. They're just kind of consolidating. They're hitting about that 90 moving average, but that's fine by me. I've added to this thing quite a few times, meaning I've scaled in, and I'm okay doing that if we keep going lower. Of course, I'm not saying that you do the same, but ultimately, I'm bullish on this company. I like it. it does a lot more than just a vaccine.
Absolutely. Pfizer, a huge biotech company. I've actually worked with them in the past when I was back in the biotech world. Now, of course, I've moved on to bigger and just different things. But okay, Simon has a bunch of tickers he wants us to take a look at. And some of these were one of the ones that we took this week. So let's go ahead and go through his list. Of course, my personal favorite, Big C, Big Commerce. Taken a bit of a hit since the IPO. We had a really nice bounce here, and it's just been kind of beat down lately. I know you're into this company, Riz. What are your thoughts on this one?
Yeah, so I've had a position for a few months now in the red, but I still hold. This is a pain in the ass type of position. I believe in the company. I believe in my thesis. Again, it's one of the few IPOs, recent IPOs that I've traded, because usually, if you know me, I don't really trade IPOs. I don't really, um, believe in them too much because they're a bit too early to do so. But for this one, I think there's potential. I just need to have the technicals more so aligning with my thesis, which hasn't happened, right? You will notice it'll do well a couple of days, and then it just get pushed back down. It'll do well another day, and then it just get pushed back down. So, it's not building momentum. We need momentum to come in. So if you are not in the stock yet, I would say just wait a bit. Perhaps, let it break above 65, let it break above, 67, getting closer to 70. And then I think, it has potential to rally. It's just the stars need to align for this, because right now this thing's a big pain.
Absolutely. And remember, everybody, no one take my IPO. For everybody who's been here for a while, you know what it is. So I'm not going to mention it here because someone will take it. All right. Datadog. Let's look at some data. All right. So the K9 of data stocks here. This one seems to be in a pretty nice uptrend for, overall, since you're in about May. It seems to be kind of grinding towards the upside a little bit. Where are you looking at on this one, Riz?
Yeah, it's a great company, great sector, great industry that, has upside. Again, hitting up against that kind of resistance. Technicals aren't that great right now, but again, if you give this enough time, like, we do have earnings coming, so be mindful of that. But if you give this enough time, I think this will pan out. Earnings just a bit shy of a month away. I think maybe around 90. If it can get to 90, that's a solid entry. Honestly, that's a solid entry. I don't have a position in this right now. We have traded it. I do like the company. I do like the stock. I just think 90 area is great entry. Who knows? Maybe if things start looking up, we might take an entry sometime soon.
Sounds good. Sounds good. All right. So another one that we got in this week is Facebook. Now, obviously, Facebook been taking some heat lately over accounts being shut down, and I'm not just talking about President Trump's account. Other people's accounts have been put in Facebook jail and things like that. And I know a lot of people are throwing out the C word. That C word being censorship. Regardless of your position on that topic, what are we looking at here on Facebook? Is it more of a technical play with the bounce off of the 200 simple moving average, or do you think this is all just overdone?
So took a position on Friday. I am long Facebook at 250. So let's see where it goes. I think it's a great entry. I think anything below 250 is a great entry. Even now, it's a great entry. It's overlooked. We have earnings coming up as well. I think they should do reasonably well. We've seen this kind of synopsis before. We've seen this happen with Facebook before, where it's either, big firms pulling their marketing or ad spend. We've seen the Cambridge Analytica scandal. We've seen this, that, it's weathered the storm. Facebook's weathered the storm, and I think they can do that again this time around. I don't think people are going to completely shun or shut, their accounts out of Facebook because of the censorship stuff. Some will, but the majority won't. So as fundamentals go, Facebook has a wide moat, has a lot of cash, a lot of free cash flow, has no debts. Right? Facebook has no debts. So yes, definitely, I'm bullish on it as can be.
Awesome. All right, FSLY. Fastly. This one we've traded in the past. Again, technically having a little bit of a rough time here, though. Obviously, with the market kind of rolling over on Thursday and Friday, that would kind of tend to push this down a little bit.
Yeah.
Me right now, I can't say that I'm seeing a whole lot of directionality in this. Riz, what are you thinking?
Yeah, no, this is one we had long. We were making money on it, took profits on Friday just before, it dumped lower. So great exit on my end, especially for those of you that were in sync with the market and paying attention. This right now, I'm out. I'm not really touching it just yet. I need more confirmation of direction on this thing. It's not a company that you want to bag hold or just hold on for forever because the fundamentals are not ideal. It's one of those kind of speculative companies that moves big, as you can see with the candles. But right now, no position. I'm kind of neutral, just waiting on sidelines.
Absolutely. Another common ticker that we've traded here in Elite before, Micron. Obviously, a fantastic semiconductor company, though I know that sometimes we see a rotation out of semiconductors. Do you think that that's, we're on the horizon for that, Riz?
Yeah, so semiconductors are a cyclical industry, and Micron's been a great value, great company. Unfortunately, I've traded it many times before, done well, but I did not have a position on this run up beyond 56, and now it's around 80. I didn't have a position, but hey, that's fine. I think it's a bit overextended. I'm not a buyer at this level, although some would argue that there's a lot more potential in it in the next year or two, and that's fine. But that's not the time frame I'm operating on right now, and I'm just kind of waiting. And if there's a pullback to around 75, 70 area, absolutely, I'm paying attention.
Guys, getting in here, this would be my textbook definition of chasing right now. If you get in on something like this that has had this big of a bull run, that's an absolute chase. And sometimes it can work, and sometimes it can bite you in the butt, and it can bite you hard. So just be really, really careful. And then the last one on our big list from Simon is GSK, GlaxoSmithKline, another big pharma company. Looks like they're having a bit of an upturn here after this rundown over the last couple months. If I recall, we had a position a while back in GSK.
Yes. Yeah. So GSK, I believe I still have a position. I don't have my account open in front of me, but it was in the red quite a bit, but it's recovered. I kept it open, and let me just confirm that right now. Yeah, so I have GSK open. It's relatively flat in terms of my break even. And I still hold. I think there is upside, very much similar to Pfizer. We've noticed that some of these large pharma companies have kind of gotten beaten down and have just kind of been moving sideways, whereas some of the more speculative biotech and all these kinds of drug trial kind of companies where they're very dependent on a breakout study, those kind of companies have just gone bonkers. Right, so I think the market's completely mispricing and is a bit crazy. But GSK, another solid, large pharmaceutical company that I'm a big believer in. I have a position myself. So February, we got earnings coming up in the beginning of February. So keeping an eye on that.
For sure. Here's a ticker that I know you're going to love to talk about, Riz. SPCE, Virgin Galactic Holdings. So what are your thoughts on this one, Riz?
Yeah, so this is one of those companies that's obviously been quite volatile, especially in 2020. But you will see that gap up for Thursday because it was announced that it's going to be part of like a space type of ETF from ARK Investments, run by Kathy Wood, and well, I'm not the biggest fan of the company. The fundamentals are absolute garbage. It's a very speculative company in terms of the business model and if they can achieve what they plan on doing. It's for me, I'm not. I have, 10 different other companies out there that I'd rather put money in before doing it on this. As a trade, the setup isn't ideal either. I mean, some would say, oh, it's a breakout, buy this. Well, again, to me, this is a chase. 36 area is resistance. So again, not something I'm too thrilled about in taking a position.
I have to agree on that one. All right, JMIA. Jumia Technologies. I'm not too familiar with this one, but based on what it looks like, okay, so more recent IPO on this one that has kind of had a bit of a run up here.
I think this is an African continent type of e-commerce platform. I think something like that. So maybe like the Shopify of African continent. Maybe don't quote me on it, but ultimately, I'm not a buyer of this either. Too quick, too much, too quick. Especially with that double top forming around the 49, 48 level.
Yep, absolutely. Sorry, my mouse is going crazy. VFF, Village Farms International. This is one I've never traded before. It doesn't look like something. Ooh, yeah, I'm
not too familiar with the company, but has had a significant amount of volume building in the least recent days. But this looks like quite of a momentum type of setup. I think if someone is bullish, has some kind of thesis in play, and if they feel like they want to try and see if they can run up this position with momentum, then yeah, I can see the entry, especially on the drop gap down on Friday. But you have to be careful because anything below $10, I'd be out. I'd be out of this if it drops below 10.
100%. Okay, then the last one here from Zishan is TROX. This sounds familiar to me. Yeah, this is another one of these stocks. Okay.
Yeah, another kind of small cap mover. I'm not too familiar with it. I recognize the ticker, but I'm not too familiar with the company itself. Again, building momentum. Again, it's one of these kind of technical kind of positions. I highly doubt this would be something that you want to carry for anything beyond a swing trade. But yeah, if you decide entering this, make sure you have a stop because when these things kind of go south, they go south really fast. And for me, although I'm not a buyer, if someone has a kind of a thesis, and if they feel like this is good, then I would make sure that you have a hard stop set up around $12, $13 at least.
All right, now I have been waiting to get to this question from Manuel because this is perfect. Thank you for asking this question, Manuel. And I'm going to show my age here. And I'm sure a lot of people will not know the reference I'm going to make. There was a Simpsons episode once where everybody in Springfield was buying pumpkin stocks. And everybody sold before Halloween except for Homer, right? And so they were making bank on this because they understood how the market worked. Now, Manuel's asking about snow. So, Manuel, I want to tell you right now, you've got to sell snow before March. Otherwise, your profits are going to melt. Okay. Sorry, I couldn't resist that. For those of you who have seen that episode, have fun with that. Ooh, no, this is an IPO. So the question was, he's looking at it long for a swing trade, was holding up around the 300 level nicely, but broke that support along with the market around 2 p.m. Okay, so you're watching this pretty closely on Friday. Should we see some push up above 300? It could be a good swing long, I think. I don't like this setup at all for a long play. This is in a really pretty solid downtrend here from the technicals. I would not be taking this one long if I were you. Riz, what do you see?
Yeah, not the most ideal setup. Some of the technical trading gurus will say, this is a head and shoulders forming. For me, I don't like it, like you said, Chris. It's not the worst setup. It's not ideal. I would classify this setup more as kind of a wait and see. Keep an eye on it. I know you are keeping an eye on it, which is great. I think around 22.75, it gets really interesting because that Friday candle isn't too confidence inspiring. Right? Maybe you take a starter, maybe you dip your toes in and then see how it goes, and then maybe you add at 275 if it gets there. But otherwise, I'm better off kind of just letting it do its thing, see if we can get it at 275. If it breaks above 305, 310, yeah, then I think it could go off to the races. Okay, so hopefully that gives you a bit of a kind of a flow chart in your head where if A happens, do B. If C happens, do D.
Absolutely. Gage wants us to take a look at AMC. Obviously, this one hurting pretty bad with, not many people being in movie theaters and things like that. So what it says, looks very speculative, 5-year low, but Friday's technicals look decent for a mean reversion trade. It just kind of looks like it's sitting here around $2, really is what I'm seeing. Man, I don't know what your thoughts are on this, Riz, but this looks like it'd be a rough call to go long on this one.
Yeah. So this is more of a short squeeze type of play as well, and like a turnaround play. So a mix of a turnaround play and a short squeeze. And I agree with Gage in that sense. The $2 mark is kind of that long-term hardcore support. It could very well run up. Look at the volume right on Friday. Personally, I don't have this trade. Personally, I likely won't be taking it. Again, I'm very selective with the positions I take. This could very well, squeeze higher. It could very well squeeze higher to $3. And when you look at it from a percentage standpoint, that's great. That's a great percentage gain, right? If it goes from $2.33 to $3, which could easily happen with a squeeze, I just feel like you have to be careful because this is not the first time people have mentioned a squeeze on AMC, just like it hasn't been the first time, and it won't be the last time people have mentioned a squeeze on GameStop, GME. So I agree with you in terms of the reasoning behind taking the trade. It's just not something that I personally care to take. Okay, and that shouldn't kind of chastise you. That shouldn't put you off in terms of taking the trade or anyone else. It's just not my kind of position or something that I really want to bother with. Like, again, I avoid trading these tiny companies, these kind of penny stock, because it is a penny stock now. It wasn't a few years back, but it is because of obviously 2020 COVID. But you know what? I think this could definitely play out. Just be very careful not to carry below, $2, or $2.20, something like that.
I think the thing that bothers me the most on this one is we had so much volume on Friday, but even it could not hold over 250. That to me tells me that it's got a lot of downward pressure still on this thing. So I'd be interested to see how it behaves on, when the markets are back open again. But yeah,
yes.
not confidence inspiring here on a squeeze kind of like
for this kind of trade, for that kind of short squeeze type of thing. Next week makes or breaks that kind of thesis. If we see a short squeeze, we're going to see it next week. Sure, it could continue into the week after, but if we want to see a short squeeze, we need to see it next week on Tuesday and so on. Because if it doesn't pick up then that short squeeze kind of thesis goes out the window. Okay, like you said, that huge, massive candle on Friday still couldn't keep it above $2.50 a share. So absolutely. If we get a short squeeze, we'll see it this coming week, Tuesday onwards. Otherwise, it's a dud.
Yeah, absolutely. Gosh, we got tons of questions. Dropbox looks to be dropping the box a little bit here.
Dropping the ball, Chris.
I know. Dropping the ball, dropping the box. Whatever.
Come on. Yeah, let me just get right to it. 21. Okay, if it gets to 21, I like it. Previous, all the moving averages are converging. We've traded this before. Not too bad of a company. Hasn't been looked at too favorably, over the last couple weeks. But hey, I think 21 area is great.
Absolutely. Sorry, guys, my mouth is going a little nuts. We've got a couple questions from Jonathan here, and then I think we'll probably call it an evening. AGNC Investment Corporation looked to be making a bit of a momentum play here, but got wrecked by coronavirus.
Yeah. Yep.
Yeah, this is a slow mover, guys, except when we have a huge catalyst here. Volume's kind of deteriorating on this. I would say it's not too awe-inspiring, so nothing amazing looking here.
Yeah, I'm not sure as to the kind of thesis on this. This is not something I personally traded, but it kind of seems to be consolidating, right? Consolidating. You have to have a plan for these kind of trades, where if you believe in it, if you have a plan and it makes sense for you to take it, then absolutely, right? I can't, especially this kind of setup, I can't really say one way or the other, especially when you have a consolidation. We know that usually periods of consolidation are followed by a push directionally, up or down. We don't know which direction though. So if you have a thesis, then absolutely, I think the moving averages are also kind of converging, kind of trailing it. So it's not too bad of a play if you are bullish on it.
Then VZ, Verizon, got to get them phones out there.
Yeah, I really like this. So I like Verizon. I like AT&T as well. Both telecom stocks, both large cap telecom stocks, both pretty much what telecom stocks everyone's aware of. I like it. I like it around the 56 level even more so. But because Thursday and Friday were bullish for it, it's actually been on my watch. Something I was looking at last week, but I didn't take a position because markets on Friday didn't give me confidence to do so. And Thursday, I wasn't too ideal because it was the first green candle after a sequence of few red days. I think this week, if I do take a position, it would be this week, seeing if we can get a recovery back up to around 59.60 area. Hopefully that helps.
Absolutely. Cisco Systems, another company here. Looks like they're making a bit of a bounce here after the November drop. Looks like they're hitting on some resistance here.
Yeah. So Cisco, another large, play that we've taken before many times. Great stock. I really like it for long term kind of hold. And you can see it's had quite a bit of momentum come in, right? With earnings coming up in the beginning of February. I don't really know how that could go, or no one really does. But ultimately, I feel like want to be careful of that 48 level. That's more of that kind of long term or medium term resistance area. But I think you can continue to 48. If you are looking to get in long right now at this level, have a stop unless you're okay holding this for long term, which isn't too bad of an idea. But that's very much dependent on you and your thesis. But if you get in on this, just know that 48 could be a potential turning point. So either you try and run this up another $2 a share, great. If it turns over on you after you enter, you want to be cautious because you didn't get the best entry, right? So that's how you want to look at these kind of things. Not the most optimal entry, but a company is great, right? The company is good. If you have the time frame, sure, why not?
So would this be one where it might be advantageous to look at like scaling in? So maybe like taking like half position and seeing how it goes. If it just runs, rather you just leave it the way it is. And if it rolls over, you have position to, average down a little bit.
That's another great method as well.
There you go. Okay, then I want to talk about two short plays, and then we'll call it a night. The infamous SRRK.
This
we talked about this. You mentioned it in Elite, and then Simon brought it up. So let's talk about this garbage for a little bit.
Yeah. So let me, for those of you that are not initiated, this is a stock that is up Chris, I think 200% or something since so about a $15-16 stock that is now trading $61. So it's up about 330%. So I got in around, I think, October, November, right? So I think I got in around there. I am deeply in the red on this position. I got in for a short, I should clarify. I got in short. Okay, this is why you have to be very careful shorting, especially some of these this is a biotech stock that rallied on positive phase 1 trial news. Phase 1, not even phase 2. And then after that monstrous rally from about $13-14 to the $38-40 mark, they decided to do a secondary offering, meaning they effectively issued more shares. They did a dilution so they could raise more capital. Okay, the underwriters for this were some of the big banks. I can't remember exactly, but those same banks that effectively got paid by this company to do the share offering also issued ratings on it, analyst ratings, and they all rated it, with high targets. Who would have thought, right? This thing has dismal volume. It has next to no volume in the grand scheme of things, but it still moves like a mofo. It's literally being propped up by market makers and those individuals essentially hired by the brokerages to keep this above the share offering price, which was around $39 a share. You notice how that also seems to be the kind of support area, $38, right? Coincidence? I think not. This thing's pumping higher, moving higher. I'm down in this position about I can say very openly transparent about $50,000 on this. Okay, it's messed up. Again, this is a lesson for anyone. Uh, you cannot fight the market. You cannot fight institutions. You cannot fight these kind of things, right? You can't fight the market. You can't fight euphoria. You can't fight fear even or greed. So in the market, that is. So you need to be aware. And for me, I clearly, was very confident on this, confident in a sell off on this. Didn't happen. In fact, not only did it stay around the 40 level, it's gone up. So I'm continuing to hemorrhage capital on this one. Like I said, openly about down 50,000 on this. So you can imagine my position was a decent chunk. But let's see. I still keep it open. I still have it open. And I'm keeping an eye on it. But you know what? I said, probably February time, I'm probably going to maybe cut it loose. I think we are expecting some news on their drug trial stuff next month. So I'm kind of sitting put. Hopefully it drops, curls forward down. If we get a push below 50 or 48, I might just say, fuck it, buy the shares back and close the trade for a loss. At least it won't be as big a loss. But it will still be a loss, and just move on. Let it be a lesson, to you, me, everyone, that even people like me can get it wrong, especially in something that, is clearly being propped up on low volume, has institutions behind it, has, quite a few backers and people that wanted to stay above a certain price. And I'm on the wrong side of that.
Just goes sometimes to show, guys, even the voice of reason cannot necessarily stand in front of the herd and make the herd go the direction it should go. So it's one of those things sometimes where you just got to cut it loose. I know we like to try and make sure that we get our positions where we want them to be, but sometimes your thesis is right, but your time frame may be a little bit off, and that's happened to us before.
Yeah.
We're all human.
This reminds me of a stock called Intelsat.
I've talked about that.
Right. I shorted that thing and I remember losing 100, 200% on that short. This was 2-3 years ago. It wasn't as large a position. Just type in I, ticker is I.
No, It's been delisted. It's under a new ticker now.
Yeah, that's right. So there, so I remember shorting this on the run up.
Yeah, we got in short in here and then in here, and yeah, it never gave up.
I remember losing. I was down 200-300%. I'm like, fuck it, I carried this for months and months, and I got out. And my thesis was that it was worthless. It was a garbage company, and I was right. I was right in terms of my thesis, just not right in terms of the timing. So that's the thing about markets. It's a very fickle thing. In 2020, when did it go? It went bankrupt, so it got delisted, but it's just floating at, not even $1. What is it? When did it drop?
It's 72 cents, but it looks like it dropped here in November of 19.
So yeah, I was off by a year almost, but it happened. Imagine being so right on a company, on your thesis, that you expect it to not just go down, but you expect it to go bankrupt, and it does. So yes, I seen it all, man. I seen it all, guys. It just you just have to live to fight another day. And I've stopped kind of trying to force my will on the market, because I'm just one person, I'm just one individual. I may have a decent amount of money backing me and the trades, but it's not enough to fight, billions and billions and billions of volume and capital flowing each and every day.
One that we are currently getting very, very right, and this is the one that I want to close on here, is GameStop. Now, I mean, you went in hardcore on this one on Thursday and Friday.
Yeah, I did it via. So I didn't short it or I didn't buy it. The stock, I effectively shorted the options on it, right? The premium, the implied volatility. For those of you that are options traders and those of you that have taken the options trading masterclass, you'll know that, um, you know, I did the Raptor method on it, which is effectively, collecting premium on this strategically and in a very calculating manner, and it's worked out great. Did really well this past week. Many of our members actually did well just on this trade alone, and not only did they cover many months of their membership, they also kind of saw the power of doing the Raptor method and the kind of philosophy and the strategies that I use to trade options, and not just blindly buying calls and puts like a moron, randomly trying to get rich on a far out of the money call option or a put option like idiots on Wall Street bets. Okay. So, yeah, glad that you brought this one up, Chris. It's a completely different type of trade that many people may not be aware of. But not everyone took it because not everyone knows how to take these trades or is aware or has the account size to do so. But for those that can, man, it worked out beautifully.
And I really want to encourage you guys, if you want to learn about options, if you want to learn about Riz's strategies with options, highly recommend that options trading course. I went through it. It's fantastic. It was really, really good work. And if you want to learn about what options are and how to trade them in the market, and not just as Riz so gently put it, buy calls and puts like a dumbass, by all means, it is money well spent to get in on the options trading course, guys.
Yeah, and it just reminded me, like, people messaged me after this one trade in GME, and remember I said people don't go large. Even taking one contract, people made more than what it cost to buy the option masterclass in one trade.
Yep.
So, yeah.
So if that doesn't tell you it's worth it, guys, I don't know what will. But we've been going at this for over an hour. Riz, just want to thank you for coming out tonight and sharing all of your insights with us. It's so valuable. And especially want to thank everybody who came out tonight for the webinar. I know we went a little long, but I really appreciate the participation so far in the webinar. It's fantastic. I love you guys coming out here with all your great questions. It's just been amazing to see the growth here in Elite over the last couple of years, and I'm so glad that all of you are part of that.
Likewise, I echo the same sentiment. Thank you everyone for joining. It's an honor to be on here, communicate with you guys, and have you share this passion for markets that we all have. And it's great to do it alongside you all. Great to have your support. It means a lot to me. I don't just say that. I genuinely, get very, very kind of awestruck with the amount of support and the amazing people that I've had a chance to meet, work with, and continue to communicate and work with. It just blows my mind. I'm one of the luckiest people on this planet. I genuinely believe that. And, it's been an honor. I hope to, hopefully come back soon on these, and it's been a great ride.
Absolutely. Absolutely. So thank you everybody for coming out, and we will see you in Discord. Good night, everybody.
Ciao.